Alright, let's dive into something that's been bubbling under the surface in the currency markets lately: the Canadian dollar's surprising stability against the US dollar. Now, I know what you're thinking: currency pairs, exchange rates, it all sounds a bit dry, right? But stick with me, because what's happening here is actually a fascinating interplay of central bank policies, commodity prices, and market psychology. It's like watching a high-stakes chess game, where every move matters. Here's the hook: despite all the noise around oil prices, which, by the way, you'd think would be a huge driver for the CAD, the real story is in the rate differentials. Scotiabank's strategists, Shaun Osborne and Theoret, point out that the CAD's performance is being steered more by front-end rate spreads than anything else. Personally, I think this is where things get really interesting. Oil is often seen as the CAD's lifeline, but what this suggests is that the market is more focused on the yield curve and central bank actions right now. It's a shift in focus that not many people are talking about. What makes this even more intriguing is the role of the Fed and the Bank of Canada, BoC. The Fed's decision to hold rates steady, which, let's be honest, was kind of expected, could actually narrow those rate spreads and take some pressure off the CAD. But here's the kicker: the BoC minutes, due later today, are expected to show that while growth and inflation are looking better, there's still a lot of uncertainty. From my perspective, this is classic central bank speak. They're keeping their options open, which means the CAD might stay in this tight range for a while longer. One thing that immediately stands out is the technical situation of the CAD. It's been trading in a narrow range around 1.41 against the USD, and even when the USD tried to push higher, it couldn't hold those gains. What this really suggests is that the market is waiting for a clear signal, either from the Fed, the BoC, or maybe even oil prices, before making a decisive move. If you take a step back and think about it, this kind of indecision is actually pretty rare in today's fast-paced markets. It's like everyone's holding their breath, waiting for the next big move. Now let's talk about those rate spreads for a second. The 2-year bond spread between the US and Canada has widened by about 50 basis points since early May, which has kept the CAD on the defensive. But if the Fed stays on hold, as many expect, that spread could narrow, and the CAD might find some relief. What many people don't realize is that these small shifts in rate differentials can have a huge impact on currency movements. It's not just about big policy changes, it's the incremental adjustments that often drive the market. This raises a deeper question: how much longer can the CAD stay in this range? Personally, I think it's going to depend on how the BoC interprets the incoming data. If they start to signal a more hawkish stance, we could see the CAD strengthen. But if they remain cautious, the range might hold for a while. A detail I find fascinating is how the market is pricing in this uncertainty. It's almost like a game of chicken, with traders waiting to see who blinks first. In my opinion, the real story here isn't just about the CAD or the USD, it's about the broader trend of central banks navigating a tricky economic environment. The Fed and the BoC are both trying to balance growth, inflation, and uncertainty, and their decisions are rippling through the currency markets in unexpected ways. If you're trading currencies or just watching the markets, this is the kind of nuance that can make all the difference. So here's my closing thought: the CAD stability might seem boring on the surface, but it's actually a window into the bigger forces shaping the global economy. It's about rate differentials, central bank communication, and market psychology all coming together. What do you think? Is the CAD due for a breakout, or will this range hold? Let me know in the comments. I'd love to hear your take.